It's about that time of day again. My name is Joseph. It's Monday evening, April 17th, 2017. Welcome back to your nightly newsletter. We're covering crude oil, S&P, gold, euro, and FDAX tonight. Crude is bearish, but sitting at today's low, just a few points below the double down and measured move, telling us we need to wait for a better opportunity to sell high tomorrow, and we have a battle zone waiting overhead. The S&P is bullish after a low volume rally sent prices fluttering higher today, but we never got a pullback, telling us that buyers are likely waiting back at support levels to retest the high tomorrow. Gold is bearish, but sitting right on multiple support levels this evening. It tells us to avoid selling these lows and look for a better opportunity up at resistance levels waiting overhead. The euro's bearish and trying to retest yesterday's low after the bulls tried but failed to hold a retest of the measured move earlier in today's session. And of course, the FDAX is bearish with a spike in channel, which tells us everyone is already short this market and to look for traps and failures up at the highs tomorrow. We're back from a holiday weekend, rested, refocused, and ready to find some great trading opportunities on Tuesday's session. As always, I have another great newsletter in store for you guys and gals. Before we jump into the charts, though, I do want to remind you, the only place to watch the full-length version of this video is on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry, there's a link in the description of that YouTube video. Dig into that description, grab that link, and follow me over here to the blog at Sideways Markets for the full-length version of our nightly newsletter. While you're here, don't forget, join the mailing list. I'll send you an email every evening when our nightly newsletter goes live. Follow me on social. Right below the video tonight, lower left-hand corner, plenty of different ways to follow me on social media. Right, follow those social media channels for important links and updates throughout the day. Don't forget to download charts. That's right, all the charts you see using in tonight's video, you can download today's charts and have them on your computer for tomorrow, where it says download the day's charts. And please don't forget to grab your free pass. If you're not an advanced member here at School of Trade, you're going to learn more with me in 90 minutes on that free pass than you will anywhere else on the interwebs. I can guarantee you that. Grab your free pass in the upper right-hand corner. Don't forget, if you're brand new here to the SOT community, check out the frequently asked questions, and I'm always here, right, to answer all your questions 24/7, 365. I'll have to reset that chat server. It'll be up there in a moment. Hope you guys had a great weekend. Like I said, long weekend, holiday weekend. Back in the action, though, getting ready for a big day here tomorrow. Tomorrow's Tuesday, April the 18th. What do we have on the calendar for tomorrow? We got 8:30 and 9:15. Got some big news tomorrow early in the U.S. session. As you can see, though, there's nothing else on this calendar. We're getting some minor news from the RBA tonight at 9:30 p.m. Nothing in Asia, nothing in Europe, right? We are all focused on the U.S. session tomorrow. 8:30 housing starts and 9:15 industrial production. So, of course, be on the lookout tomorrow. No major news in the London session. Remember, London had the day off today with the Easter Monday holiday, so it might be a little bit slow going into the London session tomorrow. So be aware of that. Don't force it, but it should be another great session with all of our clients inside of our trade room, which we open up at 8 o'clock Eastern time for the U.S. morning session. Don't forget, you do not need to go out this alone. Come out and join me tomorrow as a brand new advanced member in the trade room. We open up at 8 o'clock Eastern time. 8:30 and 9:15 news tomorrow. Make sure you mark a calendar on that. That way you are ready. Let's dive right in here today. Starting off with crude, we'll go crude, S&P, gold, euro, and we can't forget about good friend at the FDAX. Crude is bearish and sitting right at today's low, just a few points below the double down and the measured move support levels. The bears obviously have control, but we're 2 legs down off the highs, which tell us that most sellers will consider this market to be oversold, waiting patiently now for a 2-legged correction up off these lows to sell high tomorrow. One thing that stands out on this chart is the previous day low, which stalled the sellers earlier in the session. Now, I'd like to see selling opportunities above the prior low of day, right? Use that prior low of day as a magnet. So look for the test of the battle zone overhead for the most reliable selling opportunities tomorrow. Really good example here this morning. We came out this morning, a very low volume session, right? Pretty much across the board today with, again, day off in Europe, and a lot of traders, I think they kind of postponed their Monday to Tuesday. It was a pretty low volume session here today, but we had a lot of opportunities that we definitely found today with all of our students. Most important thing, though, is you can see the market started off today in a bear environment here, going lower. It got stalled out there right below that prior day low, right? That was yesterday's low, or should I say last Thursday's low, right? Stalled out at the prior at the prior low of day, shot up, right, and gave buyers plenty of opportunities, right, to buy those dips before it rolled right over under pretty much its own weight here. Now, with that said, we draw our channel down. That channel, of course, tells those sellers to look for a chance to sell high. They got their shot to sell high, and now, of course, that price collapses down. Now that price collapsing down goes 2 legs down. That's why I said earlier, right, we are 2 legs down off the highs. We have to assume now that most bears are going to call this oversold. With that said, as you can see here, we have a measured move on the chart down around 52.73. That measured move also translates into a triple measured move at 52.43. On top of that, the first 2 swings off the highs, that'll give you your double down, right? That's a major support level as well. And let's be honest, when a market goes lower and then goes higher and then comes all the way back down, their objective is always to retest that low, right? Whenever we have a bull market fail and turn bearish, we know their objective is to retest that low. So we've got a lot of different reasons here right now to consider this market to be pretty well fed to the downside. We got back to lower day. That's the ultimate objective. They got their double down. They got their measured move. The bears have all their targets filled, right? And when they have all their targets filled like this, we expect to see some profit taking. And we know at this point it's going to take a little bit more to entice these sellers to get back into this position again. So if you're a bear right now and you just cashed a big paycheck, what would you be looking for next? You probably wouldn't want to be selling down here, right? So I'm probably going to consider that to be the no trade zone. That means our best option is price goes up so we can sell it back down, or price goes down so we can sell it high, right? Those are the 2 scenarios we want to be looking for tomorrow. Now, the very first thing we talked about here, right, that prior day low, that definitely stands out like a sore thumb. Again, the market tumbled lower but couldn't quite keep it together below that prior day low. Price shoots up to give those sellers a chance to sell high and then collapsed back down again. So that prior day low may just have an impact here again on us tomorrow. What I'd like to do is get above that level so we could use it as a magnet, right? If we're gonna see price hovering around that, again, you can kind of see that high volume area right about there, right? That's where most of the volume was today. I want to get it up so we can sell it back down on that. So how do we do that? What would be some opportunities here? Well, look left, swing high, reversal line. The battle zone, of course, is waiting overhead here at 52.85. I want to get this price up in these resistance areas so we can then sell it back down. What would that look like? Well, based on the fact the moving average is right here at 73, right, probably not going to get a good failure here on this. So chances are high we're probably going to see something like this for the most reliable trade going, if we can get it up. A 2-legged correction. Bottom line is, well, we'll probably, again, normally I would say price go, let's get this price up to the moving average so we can sell it back down again. But the moving average is right here. So we're already testing that moving average. We're right at the double down. We're right at the low a day. So, don't get me wrong. We may see them run through this low, but it's not going to be a very reliable place to be selling. So with that said, how do we sell up here? Well, we have to anticipate if price does rise higher here, it's probably going to create a trend line, and that trend line will need to get through it and use it as resistance, right? A little breakout pullback, a little 2-legged correction, right, as we like to call them. And of course, that will be an easy way, a reliable way, right, for us to sell high tomorrow. Again, normally I'd be looking for a failure here, but it just doesn't look like that's going to be the case, right? So look for that breakout pullback, right? Look for that break below that trend line, right, up and retest that 2-legged correction for the move back down again. What if price goes lower, right? If price goes lower here, what's the plan if price goes lower? Well, this is where, right, this is where we got to make sure we don't sell low. So what I really want to see is, I want to see proof first. I want to see a real strong move down that really shows proof that these bears want to keep selling low. Remember, you've got to think back in time and put yourself in the shoes of the sellers who sold high. The sellers who sold high, those are the bears we have to respect because they undoubtedly have big accounts. They undoubtedly know what they're doing. They undoubtedly have the patience, right, to sell high in a bear market. So we can assume those market movers are not going to be down here. They're not going to be selling low. So what's going to take to get another elephant, to take another bite with this thing going lower? It'll take a big, strong move down. If I'm a bear and I'm looking for a jump up so I can sell high, it's going to take a lot more than just a lower low for me to want to sell low here, right? I'm going to have to see a real strong move. Now, when you see a real strong move, what happens? Well, now all of a sudden we're oversold. I don't want to sell low. So that's when we start thinking about two opportunities here. One would be a failure to sell high, right? Get back above that. You know, the reality is this pullback setup will be just too easy. Right? It'll just be too easy. If we make a strong move down, everybody knows to sell that pullback. You know, unfortunately, the old tricks we used to use 10 years ago they don't work anymore, right? They just don't work anymore. The markets are too efficient. There's real-time data on cell phones these days. You're not gonna take advantage of any efficiencies in the market right now. So the reality is, if price goes lower, yeah, that pullback's an option, but it's not usually the most reliable. Usually what's a lot more reliable is to wait for that pullback to fail. Again, this is where that kind of two-legged pullback comes in, trap high and back down, right? That will usually be a much more, right, reliable way to sell it. Or, right, just your straight, one of my favorites, right, just your straight pullback failure, right? Go back above that trend line, go back above that moving average. Buyers will try to buy the pullback, and we look for that failure from there. So really at this point, as this price goes lower, you're looking for that trap high, looking for that failure back down, or if it does start to get a little bit crazy, right, if we do go lower here and we get this multi-legged pullback, right, draw that trend line, breakout, pullback, two-legged correction, right, and then back down again. So plenty of opportunities to sell high, plenty of different ways we can get in. What we want to see, though, the most important thing is that when we find ourselves in a trending environment and we're sitting right at that low of day, either I got to get this price up so I can sell it back down again, or I've got to see some real strength going lower that's going to tell me I now, comparatively speaking, can sell high, trap high, buyer failure, or like I said before, right, that kind of classic two-legged pullback, draw the trend line, and then sell down from there. So it all depends on how it pulls back from there. The objectives down here obviously are going to be this triple measured move, triple down, and then of course last week's low, right? 52.29. We know those bears have control right now. Now, what would it take for this to be a bull market? You know, we always want to make sure we have both sides of the market, identified here. How would you get a bull market? How would this be a bull market? Strength. The strength would have to be right away here, and the buyers have to hold a pullback. Pull back, hold that pullback. In other words, if this market just jumps up, you got to remember the bears that sold up here, they're going to say, perfect, let's do it again, right? And they'll sell into it again. It's going to have to be a real strong move up. That strong move up, we'll have to see it hold a pullback. And then to get a reversal of that trend, remember, we don't want to call a bottom here, right? We don't want to call a bottom here. The reversal of that trend will happen once they hold that pullback and then explode to a new higher high. If we see those buyers make a new higher high and hold that pullback, when I say hold the pullback, what I mean is pull back, usually the moving average, and then bust through to a new high on strength. Yeah. If they hold that pullback, this will become a bull market. And then we'll do the same thing, right? We'll grab a new channel. We'll look for a new measured move, and their objective will be to retest, right, the high from today. Guys, one last thing here about crude oil. We do have rollover we're watching right now. Right now, of course, is the 517 contract. Around the 18th of every month, you want to be thinking rollover on crude oil. It's really, really easy. Look at the next month contract. Crude's easy. It rolls over every month, right? So we're on the 517 right now. Check the 617 contract. When that volume is higher, then you know we're rolling over to the next front month. It's likely going to be tomorrow or Wednesday, so be aware. This chart may look a little bit different, but the fundamentals of it should be the same whether we're on the 517 or the 617. So watch out for that rollover. We'll know more probably between 7 o'clock and 8 o'clock Eastern time tomorrow, depending on which chart we'll be trading tomorrow. And again, like I said before, we're going to be in our trade room tomorrow morning at 8 o'clock Eastern time with all of our advanced members, and we'll do it with you guys there in real time. So don't go at it alone if you need more help on that, but definitely watch out for rollover tomorrow. Looking great. Got a nice trending environment, channels, measured moves there on crude. Not the plan for crude. We'll see you guys tomorrow on that one in the trade room. Moving on now from crude to the S&P. Guys and gals, it has been fantastic to have you guys with me here today. Hope you guys had a great Easter and Passover holiday weekend. Hope you guys are rested and refocused. Don't forget, if you're watching this video right now on our YouTube channel, it's only a small portion of the YouTube video. Follow that link in the description of the YouTube video. Go to the blog at Sideways Markets and watch the full-length version. If you're already here with me on the full-length version, don't forget, make sure you join our free trial. You're going to learn all about the who, what, where, when, and why. You'll have a Harvard education on how we trade here at School of Trade by taking that free trial. So make sure you join the free trial to learn more about how we trade. And don't forget, while you're here, check out our 3 levels of membership, our beginner, intermediate, and advanced levels of membership, what I call our professional trader transformation. You'll learn the fundamentals of running your trading business as a beginner. You'll learn the technical skills that we talk about every evening on our nightly newsletter in our intermediate. And of course, we'll join the trade room and we'll execute the strategy together every day as advanced members at 8 o'clock Eastern time, Monday through Friday in the trade room. Guys and gals, you've been too nice to me tonight. Thank you for your time. Don't forget, holler at me if you have any questions on live support. Read the frequently asked questions. Join the free trial. And I'll see you guys same time, same place next time. Adios, amigos. Bye-bye for now.